Hey everyone, welcome back. Today we're digging into Jackson Financial's latest earnings, and wow, what a quarter. We're talking Q2 2025, and folks, this wasn't just a beat, this was a blockbuster. So let's get right into it. So how did the market react? Well, the stock popped over 7% in a single day. I mean, that's a serious move. So the big question is, what's the story behind that number? What did investors see that got them so excited? We're about to break down the 3 key things that really drove this rally.
All right, let's start with the headline numbers, because that's where the story begins. Jackson dropped an adjusted EPS of $4.87. Now get this, that absolutely crushed what the analysts were expecting, beating them by more than 5.5%. You might notice the revenue line was a tiny bit light, but honestly, in the world of insurance accounting, that's just noise. The market, and rightly so, looked right past that and zeroed in on the real prize, pure, raw earnings power.
And to really put this into perspective, it wasn't just a one-day wonder. Over the next month, the stock was up almost 13%. I mean, think about that. They didn't just beat the S&P 500, they completely lapped it. And this was all happening while the rest of the insurance sector was actually in the red. Now that is what you call decisive outperformance.
So where does all this confidence come from? It really starts with this number, 566%. That's their risk-based capital ratio, or RBC. It's basically the key health metric for an insurer, and their number is just massive. To give you some context, their own minimum target is 425%, so they're not just playing it safe, they've built an absolute fortress. And that fortress gives them a ton of flexibility to do what they want.
Okay, so that flexibility brings us right to the first major driver behind this success. You see, Jackson has become an absolute capital return machine. This is really pillar number 1 of their whole story right now.
And hey, don't just take my word for it. The CFO, Don Cummings, he basically spelled it out for everyone on the earnings call. He was super confident about it. So, when a CFO talks like that, it's not just regular guidance. It's a huge signal to the market that says, hey, giving cash back to you, our shareholders, is our absolute top priority.
And you know what? This isn't just some random thing they're doing. It's all part of this really simple but super powerful philosophy they have. They call it earn it, then pay it. It's a 3-step dance. First, they make money. Generate free capital. Second, they push that cash up to the main company. And third, boom, they send it right out to shareholders. It's a clean, disciplined process that they can just run over and over again.
And the proof, as they say, is in the pudding. I mean, look at the numbers. Their goal for the whole year is to return somewhere between $700 and $800 million bucks. Well, we're only halfway through the year, and they've already returned $447 million. On top of that, they're sitting on over $700 million in cash. So yeah, they have more than enough firepower to not just hit that target, but probably blow right past it.
Okay, so that's pillar 1. Now let's talk about pillar number 2, because this is where things get even more interesting. Jackson is making a really smart pivot in what they're actually selling. They're plugging right into this huge annuity boom that's happening in the US. This is key. They're not just sitting on their old business, they're aggressively building a new one.
And the star of this new show? It's something called a RILA. That's a Registered Index Linked Annuity. So what is it? Think of it as a way for investors to get a taste of the stock market's gains, but with a safety net to protect them on the downside. It's a really popular product right now. And Jackson, they sold a staggering 1.4 times billion dollars worth of these things in just the second quarter. That's some serious momentum. And this isn't just a small side hustle for them. This shift is a really big deal. RILAs are now almost a third of their total retail sales. Why does that matter so much? Well, it's huge because it spreads out their business, it lowers their overall risk, and it creates this whole new super stable pipeline of earnings.
And they're not just sitting back and riding the wave either. They're actively fueling this growth. They just rolled out new RILA products that are even more attractive. We're talking full principal protection and access to the NASDAQ 100. Plus, on the tech side, they're giving financial advisors better digital tools, making it a no-brainer to work with them.
Sometimes timing is everything. And for Jackson, the timing here is just perfect. They're making this big, smart pivot right when the entire U.S. annuity market is on fire, hitting all-time record highs. It's like they've perfectly positioned their ship to catch a massive tailwind. All right, that brings us to the third and final piece of the puzzle. And you could argue this is the most important part of the whole story. Because honestly, none of what we've talked about, the capital returns, the product pivot, none of it would even be possible without the heavy lifting they did to strengthen their balance sheet and clean up their old business. So, how'd they do it? The secret sauce here is this special entity they created called Brook Ray. Now, without getting too into the weeds,
Just think of it as a separate bucket they built to hold all the risk and volatility from their big old book of variable annuities. It's a really clever structural move that basically isolates the risk. And the impact of this is just night and day. Before they had Brooke Re, Jackson's finances were kind of at the mercy of the stock market's mood swings, one minute up, the next down. But after Brooke Re, the company is this incredibly stable, predictable money-making machine. It completely changes the game for them and what investors can expect.
And listen, this isn't just some theory on a PowerPoint slide. We have the proof that it works. The second quarter was actually pretty choppy for the markets, right? Well, Jackson's hedging program actually made money, and that Brooke Re bucket we talked about stayed rock solid. The system is working precisely the way they designed it.
Okay, so let's pull it all together. We've got 3 incredibly strong pillars, right? 1, a relentless capital return program. 2, a super smart pivot into a hot product market. And 3, a de-risked, fortress-like balance sheet. So, the million-dollar question is, what does all this mean for the stock from here?
All right, here's our take. Our analysis points to a really clear and compelling thesis going forward. First, that capital return story, it's far from over. We expect them to keep buying back stock aggressively. Second, their momentum in the RILA market is the real deal, and we don't see that slowing down anytime soon. And third, that amazing balance sheet isn't just for defense. It gives them options. They can get creative, maybe even make a smart acquisition down the road.
So, when you look at management's absolutely flawless execution on all 3 parts of their strategy, and you combine that with the powerful industry trends helping them out, well, our call on Jackson Financial is a confident and unequivocal outperform. They have completely remade this business, and we think the market is only just beginning to catch on. With this much momentum, you have to wonder, just how high can this thing go?
And just as a reminder, everything we've talked about today is for informational purposes. It is not financial advice.